Hello and welcome to Pro Trader Strategies market commentary for Monday, February the 22nd. I'm Eric Wilkinson, and yeah, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I do the same thing for you folks in these daily market commentaries, but I go a little bit further and talk about my option strategies I'm implementing into my portfolio based on my assumptions I come up with. For you all, we've gone a little bit further and streamlined that process for you to find the optimal option strategy for your given assumption. So check those out at protraderstrategies.com and follow along with those webinars because we dig into those details of those underlyings to help you find the best strategy for, like I said, any given assumption. All right, so let's get on with the overall economic data, see how it's impacting the markets. Across the pond, we got the German IFO Business Climate Index coming in at 92.4, expected to be 90.5. So higher than expected, but not anywhere near what we are accustomed to with German data points of this nature. It's usually up in the hundreds. So since the pandemic, we've dropped and have not recovered to that 100 level. And then we also got here in the United States the LEI, leading economic indicator, and it came in at 0.5%, expected to be 0.4%. So a little bit higher than expected there. That is a good thing. And we also have Bauman speaking today, who is a Fed governor. All right, so crude oil moving higher again today by about almost $2, just shy of that, as the market recovers back above that 9-day simple moving average. Now, I was really expecting this market to see a little bit more weakness, test the mid 50 handle rather than the 60 handle. I really thought the lower 50s was more of a sure thing than the 60s or the low 60s at this point, but we are starting to see some moves to the upside here in crude, so expect that to rise at the pump. Bitcoin, check it out. Elon Musk was talking about this morning, tweeting about it. We all know that he got involved in Bitcoin a little while back, and it caused it to really start making some moves to the upside, as we said in the daily market commentaries, that more and more people were probably going to start investing in Bitcoin as a company like Tesla did. Now, we got that big run. Now, this morning, trading up at 57, almost 58, Elon Musk tweeted out that it seemed like it was a little bit expensive. Well, we saw a $10,000 drop in Bitcoin. As you can see, the high there is already 57,790. But the low, if you look over at the upper area there, we can see that the low for today was 48,320. So a massive sell-off just on Elon Musk's tweet. Seeing a bit of a recovery, like if you bought it earlier today, you're seeing a nice P&L if you faded Elon. And then we got gold making that move. Now, Friday, we made a nice little bottom. Today, confirmation, a move above and settlement above the 9-day simple moving average would be a nice short-term win here, and maybe a migrate back up to the point of control, which is closer to 1900. But we have recaptured that 1800 handle with that weakness in gold, or in Bitcoin. Seems like gold and Bitcoin now are kind of a good pairs trade. Be buying both of those to Bitcoin slides and gold starts rallying to neutralize that there. All right, bonds. Have we found a bottom here at 60 or 162.02? Well, our Fibonacci is right there at 162.03, so very in line with that. We found a bit of a bottom here before starting to rebound as interest rates have continued to climb. Now, I would expect hopefully to get a little bit of a rebound. A confirmation on this, I will add some longs to maybe something like TLT. If you guys remember, I got out of my TLT up here before we really started seeing that weakness. I am a bull and want to be short interest rates at this time in our economy. I just don't think that they're going to raise interest rates anytime soon. If you listen to these Fed governors, they say they aren't going to raise interest rates anytime soon. The bonds are trying to force their hand a little bit here with a rising interest rates in this environment. But I think that the market is going to start making a move here relatively soon. I don't think they can sustain higher interest rates for that much longer in environment that we're currently in. All right, VIX coming off of the highs of the day, but still in positive territory as we are seeing weakness across the board. Well, now we see the Dow Jones Industrial Average in positive territory. When I started this video, it wasn't. We had everybody in negative territory, but just crawling back into positive territory as we speak. But the NASDAQ, as you can see, when I started here, we were down exactly 2% on the day, but down just over 240 points as we speak right now. Really showing weakness here. Microsoft, Apple, some of these high-tech names in the NASDAQ are really struggling today. IBM is actually doing very well, but it is in the Dow Jones as well. So it's not really in the NASDAQ, but we can see E-mini S&Ps just slightly off on the day, trying to make a little bit of a bottom here. Does not look like these markets are going to correct we need all of them to show a little bit of weakness. I think if we're just seeing a tech sector rotation out of tech and into some blue chips and things of that nature, then we aren't going to see as much weakness. But a broader scoping weakness across the equities would, start making this look like we found a little bit of a top, looking like we are looking at a small correction here, 5-10% or something like that. I mean, the NASDAQ was already down 2% on the day, so not major with the type of rally that we've kind of seen as of recently. Looking at the breakdown overnight, pretty weak. No real attempt to flush anybody out. Maybe a small stab at it earlier this morning, and then the weakness started showing up. But a pretty wild day in terms of the swings that we've had intraday already today. It just seems like, at any given point, we can be rallying or falling off by about 10 ticks here in the E-mini S&Ps at any given time. So it's just a real whipsaw here. Now, we talked about the rubber band winding up along this time. We can see that we got a bit of a pop to the upside, but it's still winding in and around this area. That is showing some pent up energy and a snap in one direction or the other. Now, I was saying the snap to the downside was probably the most likely. That seems to be what we're getting at this point, but just really no follow through across the broader equities at this point, and feeling more like a sector rotation anyway. All right, so let's talk about a couple of other equities. Gumbel making a move to the upside. Now, you guys remember right after their earnings, I said their forward guidance was looking pretty good and should probably trump what they saw on their earnings per share miss. And the market has started rebounding. But if you remember, I went in after that earnings and sold the March 7.5 puts in there for some dollar cost averaging. If we got the market to sell off, cash secured puts in my IRA. I already long this stock, but wanted to get a bit of a collection, maybe lower the overall cost basis. And if the market did sell off, then I would get a dollar cost average on that type of trade. Not quite there yet. So in those March 7.5 puts, I originally sold them for right around 30 cents. I'm working a 5-cent bid right now. It did trade 5, and I did not get hit on those this morning, but I am still working. Got a working order in there. I'm working an 05 bid. Last I see, it's at 15 cents. For a while there, when we were near the highs, I had a 10-cent offer, and that's when we saw those trade, but I did not get filled on that print. But the market is moving higher today, so I'm going to continue to work that order to get out of that for a nice little winner there on that trade. And Goodyear bought Cooper tires, and which basically will double their exposure in Asia or in China. So this market is off to the races, up 20% on the day, as you can see here, just on that news alone. So Goodyear tires could be an opportunity, because if we look here, they still have not recovered from basically pandemic levels. So in 2019, we can see we were trading up here at around 18. So I guess at this point, we are just now starting to get back into that area for Goodyear tires. Now, remember, this was when people were kind of pulling back on buying cars, but I've talked about this since the pandemic. We've seen auto sales start to ratchet up a little bit, as I think more and more people are realizing, hey, I don't know if I really want to get into an Uber, but I'm more than happy to have my car now at this point and be safe there. But that has caused Goodyear, the Cooper tire deal has caused Goodyear tires to rally quite nicely. But with more and more cars on the road, that might bode well for Goodyear tires. So I am looking around at my portfolio and possibly going to add this to that portfolio. So probably my IRA. Maybe get rid of some Ford, which just really isn't doing anything, and jump into some Goodyear tire on any type of pullback here. All right, that's it. One last thing, please take a moment to go over our disclaimer, as we're an educational company. I'm not trying to get you guys to jump off the cliff with me on these trades, but I am trying to show you guys how we look at these options and find the best strategy for that underlying. Now, with my Gumbel, I'm doing dollar cost averaging, right? I'm selling some puts, cash secured puts. Would like to add some of these on this nice big rally forward. Guidance looks great. All of those things are how we stay mechanical in our portfolio. I don't necessarily have to get these. If I'm getting the upside, then I'll take it, and I will happily collect this little credit over time by selling these cash secured puts. You know, they don't pay a dividend, but I just got myself one. All right. So that's all I got for you folks. Hope you've had a great weekend, and let's look for a profitable weekend or a week ahead. All right. If you can't take that, take it easy.